Just help us understand and what triggered the decision to essentially not wait and do that very big rate hike, which, by the way, at 75, 10 days ago, you told us that was not on the table.
Right. In fact, even internally, it was not on the table. So you're right. What made us do it? Well, of course, the basic reason is that spillover effects from other countries just too large. It turns out we were right because Canada did 100, right? And the US will probably do at least 75, maybe even 100. So that plus the overshooting in the what we consider to be overshooting in the forex market. So which we did not like to add further to the inflation that's brought about by the supply shocks. Okay, together with our forecast that inflation, if we do nothing, inflation next year could average 4.2. So all those things together, we had to act.
So Governor, just to clarify that, it was part of the decision to move off schedule the weakness in the peso and the expected weakness approaching that Fed meeting at the end of the month.
Yes. So we were acting on the basis of what's already happening and what we expect to happen. So we
understood. Okay.
Our view is that the Fed will raise by at least 75 basis points July 27 or 28.
That's right. Understood. Now, what I want to understand now, too, is I'm guessing many markets, too. The last time we spoke, you said August, that was a guaranteed rate hike. Because you moved yesterday, where is August now as far as that meeting is concerned? Are you still going to hike rates?
Well, we will not rule out another hike in August. But, of course, the need to do 50 in August is much, much less now. So I think that's the other point. If you're sure you're gonna move a lot in August, you might as well do it now.
Oh, understood. Now, based on the current scenario, and this could change, there are lots of factors, of course, but based on the information you have now, how high do you think you'll be able to take rates now by the end of the year?
Okay. Yeah, the thing that gave us comfort is we looked at the GDP numbers. Demand is very strong. For instance, the first quarter consumption growth was 10%, and fixed capital formation was almost 20%. So, in other words, we think that the economy can easily withstand the hike. Because remember, our current policy rate is still lower than the forecasted inflation rate next year. So in that sense, the real rate is still quite low. So we thought we had room to raise, and I think we still have some room to raise, depending on the inflation picture. The key to us is to increase the chances that we will have below 4 inflation next year. Of course, I cannot guarantee that because of supply shocks. But we're trying to make that as likely as possible. Which, if there's a recession in the advanced countries, which causes the price of commodities to fall, then we will be able to hit that 4% target next year.
Assuming inflation does fall below 4%, and I think when you look at commodity prices, suggests that we are seeing a cooling as far as input prices are concerned. Are you prepared to sit on rates, I guess, is another part of the conversation here, at 3.25% or 3.5%?
Yes, because when you look historically at the policy rate of the Bangko Sentral in normal times, that's more or less what it is. Indeed, our target inflation is 2 to 4. So a real, but if you define real as policy rate minus the midpoint of the target, a real, so 3.5 is not that high when one takes a longer normal view. Okay, of course, we must remember though that there have been many times where things were never normal. Of course, the pandemic made us very aggressive in bringing down the rates to 2%. And our assessment is the economy no longer needs it.
Oh, understood. Okay, now just help us understand, just moving forward, there, again, lots of moving parts to this, and the market doesn't like surprises. If you could rank 1, 2, and 3 as far as the most important factors that the central bank is looking at: inflation, the weak peso, and growth, and the ability for the economy to withstand higher rates as far as demand and growth is concerned, what would you say is number one priority right now?
Of course, we are an inflation targeting central bank.
Okay.
And if you take a long-run view, a credible inflation target is very important for economic growth in the long run. Like, the government will have a hard time issuing longer-term bonds if people do not believe our inflation target. So clearly, number one, inflation targeting. Then, of course, the exchange rate. We really are more concerned about economic growth because we care about exchange rate only when it's overshooting, when it's adding to problems. But often, the exchange rate reflects healthy adjustments. For instance, when oil prices are high, imports will rise, the exchange rate will adjust, which is actually a good signal to the market, to people, to use less gasoline and use less fossil fuels. So in the exchange rate, we take the view that a lot of the changes in the exchange rates are healthy, unless they're not healthy, okay? So, and they're unhealthy if they are overshooting and might have second-order effects to disanchor inflationary expectations.
Okay,
So
Governor, let me just clarify that.
Yeah,
sorry,
please.
just to clarify that. Okay, 10 seconds or so. Did the currency overshoot this week?
Well, what we were reacting to was an overshooting.